What that means is we're in a recession that is probably a global recession, with the Fed unlikely to print us out because, again, inflation, yes, it's coming down, but again, think about it like this. The way I view inflation is that if you're overweight, if I'm let's say I haven't worked out in a year and I've gained some weight. The first few pounds that I lose, easy, right? I go to the gym a little, start moving around, that weight just comes right off. It's that last little bit, that from 4% down to 3, down to 2, that last little bit to get your chiseled six-pack that is so freaking hard to do. I think we can all relate to that in some way, in some form. And again, I think that's a good analysis of what inflation is going to be like. So yes, easy. It came down from 9%, 9.5%. Now we're in the high 4s, 4.9% per today. But again, as we get lower, it's going to be harder to bring it down. Remember, we had a twofold thing. Printing of money sent inflation higher, but also there was a supply chain issue. The supply chain is being resolved. That has been resolved. That brings it down. You don't have the printing of money yet. That aspect has not fully been worked out of the system. That, again, is what's going to be hard to get us from 4% down to 2%. So what I would expect going forward is actually, this is probably one of the better CPIs we'll get over the next few months. I think it's going to get a little bit harder. Okay, so let's go back to the charts, guys. I have a big level on Twilio I want to unveil to you guys. So Twilio is taking a beating today. This is your pre-market chart. Look at the drop after earnings. So yesterday after the bell, Twilio collapsed to the downside. It's currently trading at 45.70. All right, if we go to the daily chart here, look at where this is. So there's a high risk level I'm going to give you guys. Now, high risk levels, let me explain what a high risk level is. A high risk level is a level that has the probabilities of success are lower because it's high risk. So yes, is it better than 50%? Yes. But again, for me, it's a level that I either don't take or I do a very small position at. And again, this is important because the management of position size is the most important thing for a trader. Trader can be the best psychologically disciplined, the mentality can be there. If they put way too much money in a trade, they're going to get emotional. We're human beings. That's our nature. So the way you control emotion, you get strong disciplined-wise, but you also control your share size. So the level here is right at this $45 level. There's a gap fill right there. 45 even number, high risk level, but that is a level. We're very close to that now. The next level, and this is a safer level, and by the way, there's no such thing as absolute safe in trading. I want to be clear on that, right? Everything comes with risks. But for me, I'm going to start looking at a little bit of a better risk reward, lower negative probability point of this line here at $43.45. And then this is really the big one down here, $41.40.